You can rearrange the boxes in this slide in whichever way you want. You can add boxes as well. And it provides a lot of entertainment for people trying to figure out what the principal culprits of the crash were. Let's look at the microeconomic lessons, where as a non-banker, non-professional, I have more interest. Start again. There's a crash. What's behind it? You could sum it up in one word: irrational exuberance. Europe, UK. Nigeria, irrational exuberance. I could stop my little presentation here. I don't want to do that, though, because I want to point out a couple of things which may be of interest to you. Back in 2009, at the time, I was in the process of stepping out of a role that I'd played for about 6 or 7 years as a management consultant, spending a lot of time advising clients on corporate governance. One of the last things I did in that particular role was to do a study of 25 of the largest European banks, focusing on the corporate governance of those banks. And there's some lessons from that study which may or may not have an application to Nigeria. So 2009, just after the crash. And the microeconomic lessons, if I break them down, so disaggregate irrational exuberance into 4 different headings, were, for me, all centered around the way in which human beings make decisions. And I suppose we can include bankers in the category of human beings as well. I won't run through this list because I'll get to them immediately in the next slide. I want you to consider the following. It's a test done of the way in which people respond to the way that choices are framed, are formulated. So imagine that the US is preparing for the outbreak of an unusual Asian disease which is expected to kill 600 people. There are 2 alternative programs to respond to this. Program A, if it's adopted, 200 people will be saved. Under Program B, if it's adopted, there's a 1/3 probability that 600 people will be saved and a 2/3 probability that nobody will be saved. The way that people respond to this particular policy choice is as follows. 72% of people adopt or go for Program A, 28% go for Program B. The exact same policy choices reformulated. So instead of formulating them in terms of how you save people, formulate them in terms of how many people will die. Program C, 400 people will die. Program D, the same 1/3, 2/3, but expressed in terms of dying rather than saving. The result, Program C, which is identical to Program A, only 22% of people opt for that when the choice is presented to them and formulated in a different way. We are incredibly susceptible to the way that choices are framed for us. That's just a visual graphic of that. What's the application of this to the banking sector? Let's look at the way that banks define value at risk. So if you look at the typical definition of daily value at risk, it would be something that is more or less along the following lines. It's the absolute maximum daily loss, 90 out of 100 days. Sometimes it'll be 99 out of 100 days. So that's how it's framed. You rarely see board papers in annual reports is a reformulation of that. So value risk is formulated as the minimum you can lose on at least 5 days in every year. Brackets with the potential maximum loss being multiple days. One very VAR has nothing to do with the potential for catastrophic loss that you could face, but you will still anchor on that number. Other biases. You will focus on what's available to your imagination. This is a review of stress testing major financial institutions by the Bank for International Settlement in 2004. In the US, in the event that we used, their not a single in stress. What they did was available to their imagination in the very recent past. Another to a street lighting bias. In some of the interviews which I and my colleagues did, we were often told that the reason why the bank's stress tests looked at events only in the last 5 to 10 years
are the economic services provided by institutions in the financial system. By this we mean services offered by organizations that manage money. These institutions include either banks, insurance companies, stock brokerage companies, consumer finance companies, investment funds companies, just to mention a few. A number of issues and challenges normally face these institutions. These include other regulatory reform issues, capital adequacy or capital requirement issues, risk management issues or challenges, payment systems, and disruptive technology issues. In order to gain a competitive advantage in today's global financial market, financial institutions must develop strategies and solutions to overcome these challenges. In the last 20 years, the Central Bank of Nigeria, in collaboration with the Bankers Committee, set out to making Nigerian banking industry globally competitive. What I'm doing here is just taking the Nigerian banking industry as a subset of the financial services industry. Some of the initiatives of the Central Bank of Nigeria in this direction include the automation of check clearing system through the introduction of magnetic ink character recognition (MICA) technology in 1993, and the automated clearing system (NACS) that started in 2002. The Central Bank of Nigeria has also initiated a set of national payment system framework for all payment transactions in Nigeria. The Nigerian payment system witnessed remarkable achievements in the recent past with the introduction of a number of initiatives under the Payment System Vision 2020, which we can abridge as follows. For instance, we have the maximum cap on check amounts. We have the implementation of Uniform Bank Account Number, the NUBAN, the check truncation, migration from magnetic stripe to chip and pin for cards, implementation of National Central Switch, the implementation of the mobile payment, standards and guidelines on ATMs and point-of-sale operations in Nigeria, development of new real-time gross settlement RTGS system, the Cashless Nigeria project, the biometric project are some of the initiatives that Central Bank of Nigeria has introduced in the last few years. These initiatives, no doubt, have helped in improving the level of competitiveness and integration of Nigeria's financial services sector in the global economy. With the speed and level of global interconnectivity, we are left with no option but to continue to develop strategies that will position our financial services industry if we must not be excluded from the global financial market. We can do that through the creation of new business models, innovative approaches that will not only compete but surpass the offerings that currently obtain in the global market. With this introduction, and at this moment, I would like to call on Mr. Sheni Adetu, the Managing Director of Guinness, and the Chief Guest Speaker, to give us his perspective on the subject of discussion at this plenary. What I've done is just to take the banking industry aspect of it because I'm a banker. I'm sure he would also be looking at it from maybe a broader perspective, taking the banking industry, taking other issues, even in the manufacturing and all that, and then comparing to see how the Nigerian financial services industry have faced what are the issues that they are facing? What are the challenges that they think they need to confront to ensure that this financial system remains globally competitive in today's financial market? I now welcome Mr. Adetu to the podium. Thank you.
Thank you very much.
Sorry. Hold on. Just hold it. Just hold it. Yeah.
This is good technology. Let's see how we get through this. We can try a second time. Great. Can you hear me? Thank you very much. Thank you, Mr. Chairman. Godwin, my good friend. Good afternoon, ladies and gentlemen. First, let me say that it was always a difficult week for me to be here, not least because I've got my board meetings tomorrow and on Thursday. And as well as that, obviously, for business, I need to travel out Thursday evening. But the moment I got a call from the organizers to come in here and share with you the perspective of a manufacturer, I also couldn't afford not to be here for several reasons. First, I thought it would be boring. You must find it boring to listen to bankers and government officials every now and then that you have conferences. Why not hear from those that know where the shoe is pinching, the people at the front end of the economic game? So I thought that was, on the one hand, sort of important for me, and therefore I said I would come. But I thought the second thing was really about the fact that it's absolutely critical that the banking industry partners with the manufacturing sector for the economy to thrive. So it doesn't matter what you say. I mean, you bankers make a lot more money than I do, no doubt. But when it comes to productivity and who really contributes to the productive economy, I like to say that if it's in a classroom, I will raise my hand. So, so I thought that it was good for us to share that perspective. And therefore, like Mr. Emefiele was saying, what I would love to do is just give it a manufacturing spin. And I think the starting point is to recognize that the world is changing, changing in the banking industry, changing for the manufacturers. And if I give you just the perspective of the manufacturers' understanding of the changing world, the first thing is that for us, lifestyles are changing. Okay, we are seeing consumers that are increasingly more choiceful, more health conscious, more choiceful around what they eat, what they drink. We see a lot of Generation Y coming through. In fact, the other day when I saw the population split and I saw how youthful the Nigerian population was, boy, I was really scared about, oh my God, I'm so much in the minority now, as much as young as I always think I am. But the truth is that we're seeing the coming through of Generation Y and their philosophy about life and living. You think about the whole competitive landscape. It's changing. In the last few years, we've had the likes of Heineken, i.e. Nigerian breweries, really put in additional infrastructure in different parts of the country. They actually built a plant in Enugu some years back. And actually, in the last few years, they've acquired a number of breweries across the patch. So they acquired Sona Breweries, acquired Consolidated Breweries. That's MBS/Heineken. Now, in the last 3-4 years, SAB Miller have come into this market. Now, they are a big international player. And by the way, if I digress from the topic, that is me. But I just want to speak about my business. And I couldn't think about a better opportunity than when I have bankers in the room like this. Is that okay? Are you okay with that? Because like I said, I could come here and be blowing grammar about financial indices and all of that, and I do that when I have to talk to my shareholders. But I just need to tell you exactly what matters to me. I ask one more time, is that okay?
That's okay.
Thank you. So we've got SAB Miller that came in a few years ago, and they bought international breweries in Elisha. They bought Parboard in Port Harcourt. And which other brewery have they just bought recently? So anyway, they are there. And in my business as Guinness, in the last 2-3 years, I have invested about 52 billion naira in capacity expansion in my Ogba and and Benin breweries. The point being that suddenly I suspect there's like a headroom capacity that's like 30% really higher than what the market is taking today. And therefore, with all those challenges, we've got the regulatory framework that is very intrusive. There's APCON, there's ADVAN, there's AAPN, all sorts of regulatory bodies that tell you when you can advertise, how you can advertise. I've paid so much to support the Super Eagles, but they tell me I cannot put Guinness on TV with Super Eagles, and so on and so forth. So I always say to my owners in London, the Diageo people, that actually the regulatory environment in Nigeria is becoming intrusive. That's the word I use. So I could go on and on. But the point is that why I decided I should come today was that I could not afford not to tell you how important it is for us to have the economy be stable on account of all these other challenges, operational and commercial challenges that I am dealing with. Make sense? So I couldn't just add an unstable economy to that. And from my perspective, no one is better placed to help moderate the shocks and imbalances in the economy than bankers. And when I say bankers, and that means the regulatory body, as in CBN, as well as you, the players in that. So that's why I'm here. I just got about a 20-minute paper to speak to, and then after that we can take questions and go back to the panel. But I think the point I want to raise is that I'm here to call for a raising of the game. The topic is positioning Nigeria financial services industry for global competitiveness, issues and challenges, but I'm putting it the perspective of the manufacturer. I think the role of financial services industry as a catalyst for economic growth and provider of essential products and services is especially crucial in our current state of economy. And a lot of times, and that's what I'm going to be saying to the board on Thursday, a lot of times the board will ask me, what do you take of the Nigerian economy? What I'll be saying on Thursday is stable but fragile. You can have your point of view, okay? And that's just on account of my reading. But therefore, in this sort of economy, the links between the health and behavior of financial services industry and the state of the economy cannot be overemphasized. And of course, examples abound across the patch, whether you go to Greece and Northern Ireland and wherever, where you've seen that, as goes the banking industry, so goes the economy of such institution. As policymakers, we cannot ignore how the banking collapse of a few years ago in the West really shook the entire economic world. And so financial markets are critical to our overall economic development. I don't believe that anybody will be in this room to disagree. In fact, they are the heart of everything that we do: poverty reduction and provision of information, accessibility to funding, and all of that. The critical indicators here include the size and liquidity of information. Well, first, the quality of information that we get, the integrity of the information. I'm not sure about that. We'll come to that later. But there are some critical indicators that I measure in terms of the health of our financial institutions. Some of those include the size and liquidity of the stock market, the accessibility, stability, and efficiency of financial systems, as well as facilitating international migration of workers and remittances, which affect growth and social welfare in both the sending and receiving countries. What you will not know is that so many of us, even in the manufacturing sector, read and stay so close to the economic indices as much as you in the banking industry, just on account of the impact that, like I said, any shocks in those could have on our business. As much as I look after my revenue growth drivers, I'm checking what NIBOR is every day, just to see, how or what the exchange rate is, how that impacts on my planning. The financial services industry. The primary objective of CBN's monetary policy is to achieve and maintain price stability in the interest of sustainable and balanced economic development and growth. Price stability reduces uncertainty in the economy and therefore provides a favorable environment for growth and employment creation. Besides, low inflation contributes to the protection of the purchasing power of citizens, particularly the poor who have no means of defending themselves against continually rising prices. Well, because as in most developed and developing economies, the banking system in Nigeria dominates the financial system, accounting for, from my records, about 80% of the total assets of the financial system. I will want to sort of reframe or rescope the topic a little bit to say positioning Nigeria banking industry instead of the financial systems, just sort of honing on the Nigerian banking industry for global competitiveness, issues and challenges from a manufacturer. By the way, recently I read that 13 of our banks were rated amongst the top 1,000 banks in the world. Only because Godwin is here, I have to mention Zenith Bank. There was First Bank, I think GTB, Access Bank, UBA, so many others, Eco Bank and all that. I can't name all of them. Okay. Is the chairman of Diamond Bank still here? Or Diamond Bank as well? Okay. if your MD is here or chairman is here and I've not mentioned, raise your hand, and maybe I'll consider that. Okay. But I just want to say that I'm really delighted about that, because ratings like this actually give credence to the improved soundness of our banks and effectiveness of the robust monetary policies of the central bank. So before I go on to start criticizing you, let me first of all acknowledge that, okay? But when you really sort of drill down to, so what's the role, what do I expect from the banking industry? Let's start from the basic things that you do. And what do you do? What's the basic thing you do? You sit in your air-conditioned rooms. We all go to the trade. I put a crate of Guinness on my head. I go around the market in Jankara. I sell that. I get all that money. I come to give it to you. You give me a peanut of feedback as interest, and then you go back, and when I need the money back the following day, you tell me, or plus a little more. You tell me I got to pay triple the interest that you've collected, that you've given to. We'll come to that again. By the way, don't take it up, but that's who I am. So clearing and settlement systems to facilitate trade, you do that. You channel financial resources between, like I was saying, between savers and borrowers, and you have various other products to deal with risk and uncertainty, okay? Now, in principle, these various functions can be provided by banks or other financial institutions or directly through the capital markets. Banks specialize in assessing the creditworthiness of borrowers and providing ongoing monetary function to ensure borrowers meet their obligations. Banks offer a repository for savings and then transfer them into long-lived assets, lending to businesses, housing loans, and so on and so forth. Banks also play an important role in providing payment and settlement services necessary for businesses and households to settle day-to-day transactions. And I know I'm preaching to the Pope now, but the biggest challenge that I have with banks, and I have a number of them, or should I say one of the biggest, there's a couple that's still probably bigger in my book, is that you keep using short-term funds to support long-term needs, business needs, okay, or financial needs. And that I don't get. Whether it's a failure on the entire financial system, and it's not just the banking industry, or there's still some underlying fundamental issue that I don't understand as a marketer and a businessman. Because for the life of me, I don't know why we have the likes of the capital markets. Okay, when you go to the developed world, and in the course of my career, with due respect, I've had course, with due respect, this will be my 4th managing director role. I've worked 3 times managing PLCs outside Nigeria. But it's the first time that I say that every piece of money that everybody needs has to be provided by the bank. When last did we raise funds through the capital market, whether it's rights issue or whatever? There's so much over-dependence for monetary funding that it is just untrue. I've never seen a type like this. And I don't know, like I said, whether it's a problem with the bank or the whole system, but it's something that I think needs to be addressed. I keep that aside. But when we're talking about globalization, the one thing that I get people talking about globalization is about how they build empires. Well, globalization, from my perspective, is different from that. It's really about the word promise. It's about what you bring to the world. That is what is called, globalization. It's about new markets and customers. It's about expanded resources for employees, for partners. It's about risk-taking, whether it's within the market, outside of the market, and so on and so forth. 20 years ago, the concept of banking globalization specifically meant expansion into different countries. which we always call planting the flag, right, so to speak. I think that is still a part of the proposition today, but it also involves tapping into global workforce, adopting channel and delivery strategies from different markets, and the emergence of new and dominant financial services, such as centers such as Dubai, Sao Paulo, and all of that, which I think, for all intent and purposes, could actually supplant the historical centers of New York and London. Let me say here, by the way, I'm rushing through this because I want to cover a lot of points before we get into the panel. Let me say here that another thing I need to commend the banking industry in Nigeria for is the way you've actually helped to create standards in the rest of West Africa, maybe, should I say Africa? I remember that when I was managing director of Guinness in Ghana a few years ago, 2003 or so, I remember that there was a day that I needed to cash some money from a local bank, okay? And it was a Friday evening. I will never forget that day. And I was just rushing and harassing my driver to make sure he got to the bank before 5 p.m. And as I was getting in there, they had those 7-footers at the gate and said, sorry, we've closed. And I started pleading. It was like my life depended on it. My 10-year-old boy was going to have his birthday party the following day. I didn't have cash on me. The following day was a Saturday. They expected a responsible father to have done all that long before then. I just claimed I was busy with my job. And I begged and begged, and this guy would not open the gate. Until, fortunately, somebody walked through and recognized me and said, by the way, that's the MD of Guinness. And I'm talking in Ghana. And the guy opened. And I came out and I shook my head as something had to change. And so a couple of years later, when many of you here, when your bank started coming to Ghana, it really changed the world. It changed the world. It changed the world. You have no idea what I'm talking about. Suddenly, not only were they opening until whatever time on Friday, they started opening on Saturday. They were calling you on Sunday. I suddenly had a permanent account executive that was all over me. And I never, ever, since after the Nigerian bank scheme, went to any bank till I left Ghana, so many years after, because all my financial transactions were done at my desk. And I sort of flipped that over. 2 years before they came in, see what was happening. I needed to beg to run a transaction. So globalization, when you're talking to me about how to become globally competitive, I think you are somewhere along those lines, but please don't be the tallest amongst midgets. Now, the tallest amongst midgets, I said to them in my office, is that when everybody is 2 feet tall, that means they are short, they are midgets. The one that is 2 feet 1 inch will say, I'm very tall. Yes, he's the tallest amongst midgets. Therefore, you can't define your universe as West Africa or Africa. Globalization has to be globalization. Okay, global for me, maybe because I work for a multinational, is not Africa. And therefore, let's talk about what it would take, from my perspective, to get you on the global platform. So far, so good?
Yes.
Are you following me?
We are following.
I should fire on. The focus, when it comes to positioning you for global competitiveness, there are about 5 things that I have concerns around, okay? And I just want to provoke you. I think some of it will directly affect you. Some, like I said, will be more about the system that is called the country. I think the first thing is around the unstable government policies and the economic and socio-political environment. We all know that government policies, as well as domestic and political environment, need to be conducive for businesses to grow and thrive. We've said that before. It's actually heartwarming that in response to some of our strong fiscal gains in Nigeria, as well as economic reforms, and I recognize them, the Standard & Poor's raised its long-term foreign and local currencies sovereign credit ratings on Nigeria from B+ to BB-. I think that was a step in the right direction. I think the same happened with Fitch and Moody. I think that's good. Barclays announced the addition of Nigeria recently to its emerging market local currency bond index. I think that was from the end of March 2013. JP Morgan added Nigeria's local currency bonds to its government bond index in emerging markets, and so on and so forth. I think these are all good signs for our recovery. But the question still remains, how are you, as our banks here, leveraging these gains to support domestic real sector growth, like my business in the manufacturing sector? If it is oil, you all rush into that, oil and gas. I say today, everything that is simple, that's what you bankers want to participate in. Sit in the AC, collect money. oil and gas, they're talking billions, you rush into that, okay? And therefore, when it comes to having to fight for the naira, everything is relative, by the way. There are some of the banks that are so aggressive, the sort of things that I hear. I say that if they pay me to be the MD or chairman of those banks, I cannot even touch them. But that's actually good in some sense. And I won't name the banks. Many of you will know the banks yourselves. But anyway, oil receipts generate what, 75 to 80% of government revenue, and you will know better. And it just occurs that to me that banks actually rely heavily on government deposit. A major fall in the oil price could undermine fiscal consolidation, produce faster domestic debt accumulation, increase credit risk, and place a heavier burden on monetary policy. And where it dawned on me that our banking industry is as strong as it is fragile was when the whole conversation around the cash reserve ratio came up recently. And I read some of the things that many of the banks said. And I said, these people just brag for nothing. After all, they're just using somebody else's funds. And I was saying to myself, I pray to God that one day federal government will say we need 85% or 90% of that fund. Let people go and see for their funds. But the point is that you cannot be satisfied with everything that is the norm that comes to you from where you sit. To be globally competitive means that you've got to create something that is different, special, and better, as we say in my industry. It is when people say to me that the banking industry is competitive, by the way, I agree. Okay, because it's so difficult to sell a product that somebody else says is exactly the same as the one your neighbor is selling for a lower price. Is that right? But even within that, there's the opportunity for you to create some creativity, if I use that phrase. And that's something that I'm calling for in the way that you manage resources. So one thing is really about economic and political instability, or should I say changes by government around policies. It's affected, I think it's affected some banks in the way they've reacted to interest rates and how they came back and wrote to all the clients, your interest rate has gone up because the federal government through the central bank has done A, B, C, D, E. And you cannot imagine the impact of a 1% or 100 basis points, 200 basis points increase in interest rate on a business like the one I manage. So we are a $1 billion revenue business, and if you take the margin at what, I don't know, 40, 45, 50%, everything else is what goes out, okay? Now, that's even what we generate as revenue. If I tell you about the investment we do, I just talked about the 52 billion naira 2 years ago. It didn't stop me from doing more and more investment. So when I go out, and I'm a cash generative business, but the reality is that I still have to go out, okay, and look for money to invest in capex, like I said. And if I sign off, if I run my numbers at a certain level, and I say based on that, my decision support organization tell me that it makes sense to do it. And whether it's because the government is changing their policy around cash reserve ratio or whatever is happening, and there's a change of 150, 200 basis points, you don't have an idea what it does to my books. You just don't have an idea. You don't have an idea. So it's a big thing, okay? The other thing that I think obviously impacts, still within that instability in government, changes in government policy, I think is to also talk about the political environment a bit. And by the way, before I talk about political environment, a very subtle thing, just sort of offline. So as Guinness, we sponsored the Super Eagles to African Cup of Nations. And at the time that we sponsored them, I remember nobody would touch them with a long spoon. I can't tell you how many calls I got from the national team coach, and as well as the marketers, NFF, and all that. We need somebody to come to the party. We did. They went to South Africa. They did well, as you know now. At that time, the government was paying them $10,000 bonus. Okay? Now it was time for them to go to Brazil for the Confederation Cup. Policy changed. It's not $10,000 anymore. It's $5,000. They were letting it go like it has gone out of fashion. But that's the point about changes. And I'm sitting wondering, should I continue to sponsor a team if my policy or my decision alone is not enough to guarantee the success of the team? My team and myself will determine that later. But that's the sort of thing that those changes in policy do. On the political front, I think the Boko Haram thing, whether you like it or not, is big. And it's also something that can affect our competitiveness globally, even for you, the banking industry. Because if investors are coming in and they cannot guarantee the security of the economy and the environment in which they're operating, again, I preach to the converted about the fact that then they're not going to come in. And for you to be competitive, as I will say before I go and sit down, you would absolutely have to do something about your capital base. So let me move on quickly in the interest of time. I think the second thing is that banks and financial instability, making the safer, position. So what do I say? I think the whole thing about the capital base, reputation, and recapitalization, as I was talking about. I think the tendency for systemic spillovers in times of crisis has been largely addressed, I must say, through the recapitalization of a few years ago and the recent cancellation of the universal banking model. To confidently play on the global scene, these requirements are even more critical. As of the end of 2011, the US banking system had about $13.9 trillion in assets and supports the world's largest economy with the greatest diversity in banking institutions. In Nigeria, total capital base of all local banks is about 600 billion naira, about $3.8 billion, as I'm told. But the good thing is that you have a total asset base, I understand, of about $93.3 billion, which is about 14.9 trillion naira. The thing is this, bank balance sheets and business models need to be strengthened to improve investor confidence, as I was saying, to reduce fragmentation and improve the supply of credit to the manufacturing sector. Enhanced disclosure of banks and regulatory authorities conducting selective asset quality reviews will help restore confidence in bank balance sheets as well as improve market discipline. Let me move to point number 3 out of 5 so that, again, I try and round up. And that's the one that concerns me the most. That was why I said this is the one that is the biggest for me. It's really about the high lending and limited innovative financial product services that I'm seeing coming through. I think transforming short-term deposits into longer-term lending is one of the most important functions that banks perform. We know that, okay? But if you look at it against a LIBOR of about 0.25%, this is the London interbank borrowing rate. You look at NIBOR at 11.25? You guys will know better than I do, okay? Which is about 1,000 basis points above LIBOR. And then you come in with interest rates that make it difficult for me as a manufacturer to compete globally as well. There was this Meristem study in 2012, I'm told, that showed that of the world's financial markets, Nigeria had the highest cost of accessing funds for development. And I actually have the table here. If I was putting this as a projection on the screen, you'll be seeing that Nigeria at, like I said, maybe 12%, UK at 0.5%, US at 0.25%, and so on and so forth. Okay, even South Africa at 5.60%. Okay? Now, the combination of high bank funding costs and increased risk premiums on lending has really impaired the credit transmission mechanism. Loans to SMEs are falling more sharply than for large firms. Multinationals suggesting that SMEs and domestic operations are bearing the brunt of the reduction in bank credit. And this is particularly worrisome. What you need to also understand is that the manufacturing industry cannot thrive by itself without the SMEs really coming good, okay? Because my distributor who takes the products and distributes and sells is an SME from my perspective. If he cannot access funds at all, or he cannot access it at a reasonable interest rate, then I stand no chance of being successful. And if I'm not successful, and if you are looking at me as assuming you think that I'm a major player in the economy, okay, then there's only so much I can do to support you as well. So the subject of interest rates and what we do with SMEs, it's so important. In fact, in Kenya, the last business I did before I came here, the last business I ran, aside from the DFS, the distributor finance scheme that we're doing, we went as far as looking at retailers who were not necessarily as big as distributors, but who had stable businesses that we could support. Okay? So one challenge that I would give to you, which I think in the context of or in service for that matter of you being a globally competitive industry, is to really think more about how you can create, I don't know how you do it, an environment for SMEs to thrive in Nigeria. Last week, I was very pleased to hear about the Dangote Group as they made history by signing the $9 billion facility agreement with a consortium of local banks and international investors. And I think under the agreement, if the numbers are not exact, but I think must be in the ballpark, I think 3.3 billion was the medium-term loan from local banks and international finance organizations, 2.25 from the ECA, and understand that Dangote himself had an equity contribution of about $3.5 billion. The central bank, I gathered, made a contribution of 50 billion naira with interest rate of 7%. Okay? And I'm looking at that and I said, that's fantastic. I really think that's awesome. I think that's history. But the next question that led me to is that, can we have more of that? Can we have more of that? Dangote is a fantastic man. He's made his contribution to the economy. But there are many, many more Dangotes waiting in the making who just don't have the connection and the financial, capacity to really come up there. You are here. Who told you are one of them? You better just listen. But she's right. But she's right. She is right. She's here. So please, Nigerian banks, the point I want to make, please, before I drop on that point, Nigerian banks willing to be on the global landscape, please need to start thinking about, how to increase their play in this. If you need to obtain the resources needed, get to do that. Okay? I think doing that will give you a comparative and a competitive advantage. I mean, the other day, because what some of you don't even know is that many of the multinational companies, and some of you work with companies like Guinness will know, do have parent companies that have access to cheaper funds. That's the truth. And much as we run things at an arm's length, okay? In other words, we are obliged by our compliance standards to ensure that even when you have a parent company, everything you do is above board. But even when you do that, you find that, when you run intercompany, rates, at times they are almost like half, what you get locally. And you begin to wonder, your shareholders are not asking you to do something locally or do something globally. They are telling you just generate value for the business. And if that value is coming through more from outside, what is wrong with that? So anyway, that's the point about interest rate. The last but one is infrastructure and talent. I don't want to go into that, but that's absolutely important. The world is changing, I said. Technology is getting more and more advanced. Think about what you can do from a technological standpoint to advance your cause. In terms of talent, already we're seeing some experts coming in, and I think that one of the things you can do from a globalization standpoint to be more competitive is to just open your world to getting the best talent from wherever across the world that you can find them. And I think that will help you. I always say to people at Guinness that for me, any business is based on what I call PPR. If you stop any of my 2,000 people, stop them and say, the MD says that he's always telling PPR, they say he sings about, Ayo, should I put you on the spot? And PPR is people, performance, reputation. In the course of my career, I had to work with John Holt, which at that time was a subsidiary of Unilever. I've worked with Coca-Cola, 15 years of my life with Coca-Cola. I've done about 8 years with Guinness now, Diageo. And of those three companies, and I'm not going to tell you which is which, and I'm just emphasizing the point about talent within the banking industry. Of those three companies, multinational companies, there's one of them that says our biggest asset is our people. Okay? There's another one that says our biggest asset is our brands. So brands in the context of performance. I said people, performance, reputation. And there's a third one that says our biggest asset is our reputation. And somebody put me on the spot one day and said, so having worked with all the three, so which one do you think is the best? And I'm telling you, this was an interview I had some time ago. And I said to them, my answer was, the subject of PPR is a subject of a tripod standing on 3 legs. Break one of the legs, the tripod falls. Okay? Just break one of the legs. So if you are a company that is fantastic with performance, you are fantastic with reputation is solid, but you stink when it comes to people. Don't treat your people well, no welfareism, no nothing. It's a matter of time before the company comes down, because at the end of the day, it's people that drive the brands and drive the reputation. Make sense?
Yeah.
In the same way, if you are fantastic with people and you are fantastic with reputation and you drop the one in the middle, boy, very quickly you'll see that business is not about charity. So performance also matters. And what can I say about reputation? Fantastic with people, your welfare, every messenger that works for the bank, you buy them a BMW, no problem. When it comes to performance, you drive hard, your gearing is very positive, no problem. But when it comes to reputation, they say, that bank, I can't move near them. It's a matter of time before your performance drops and your people desert you. So PPR, so invest on talent, invest on infrastructure to boost your performance, and do I say also ensure that you maintain your reputation. I'm talking about reputation. That's the last one on the 5 points. Speaks to the subject of controls and compliance. For you to be globally competitive, actually one of the things that I've seen that is impeding Nigerian banks, and that is long before, I'm a Nigerian by the way, but I've had the opportunity, like I said, to spend a good chunk of my career outside. And I've heard people say that if only Nigerian banks were trustworthy, and I know that's not necessarily true, which is almost back to my point about reputation. We could do this, we could do that, is what they say. So you should not just be satisfied with showing that you recognize the subject of controls and compliance, but you should actually try to shape the ethical destiny for Africa. You should do things that people should say that they want to learn from, just on account of what you have done in Nigeria. And I think by doing that, you just automatically, raise your game from a global competitive standpoint. So in conclusion, I think that Africa and Nigeria as an emerging economy is primed to play globally. And there's no way Nigeria can play globally without the banking industry leading that. I recognize that, okay? I think, hopefully I've said to you to try to align your corporate goals. I want to drive gearing, I want to drive this, I want to drive that. With, the market needs and your clients' needs, be a little more client-centric. And just see what that can mean for you in terms of how you take your game outside of Nigeria and elsewhere. The third point is to understand the nature of global competition, okay? And one of the things I'll talk about shortly now as I close is about that. But understand that. Hopefully I've said to you that you need to strengthen your capital base, okay? Whether there's need for more mergers and acquisition, I think the recapitalization of a few years ago did all of us a world of good. But I think that in the context of the new world that we're creating, or that is coming near us, you need to do that. Somebody once said that, if you don't shape your destiny, accepting the acts of God, the circumstances around you will shape it for you. That's the truth. You just melt with the circumstances around you. So I think I would encourage you to look at that. Hopefully, I've talked about the significance of investing in capability. Whether it be that infrastructure or people, and the point about innovation. So as I close, let me tell you that 1 minute. All roads lead to leadership. All roads lead to leadership. Okay, I couldn't just talk about the tangible things that you need to do. We need a bit of leadership on the part of the banking industry. So quickly, things that I need you to think about. First is I want you to own the whole. Own me, be my business partner. One of the biggest things that a banking person did to me in my life was when I was in East Africa as a managing director. And I invited some bank in to talk to them about, they had said they wanted to know about my strategy. I was sort of in two minds. But I said, what would I lose? I brought them in and I talked about my strategy and all that. And they came back and they said, about 2 weeks later, they said, we want to have a conversation with you again because we think there's something you are doing that is wrong. Exactly as I said it. First, I thought, who are they? I mean, again, with humility, that was my third job as MD. Who are they? And they came in and they said to me, at that time, I had a non-core business. So this was a brewery, but I had a glass manufacturing business called Central Glass Industries. Kenya, it still exists today. And the guys said to me, you have no business in being in that business. And by the time they analyzed that, I couldn't but agree with them. In fact, the only reason I couldn't sell it at that time, one of the reasons was I didn't get the right value for it. But I loved that because I felt that meant that they owned me. The next time they came to me again, they said they wanted to look at my balance sheet. They looked at my balance sheet and said, we can take this off, take that off, take that off. I love that. Why is it that 9 out of 10 banks that knock on my door is about they want to collect my cash? Who says I don't know how to collect my own cash? Own me, own the whole, own the whole. Pace and agility is the other thing that I think you need in the banking industry. Okay? There are times that things just tend to slow down. It doesn't matter. I think for the corporate organizations, you respond very quickly. But when it comes to individuals, you tend to take your time every time. Let them go and bring their mother's death certificate and their father's whatever, and where they have paid for the burial ground of their the mortuary bill and all that. Like you said, he's a banker. He's saying what they say in his bank. That's you can see mortuary bill of his grandfather. Anyway, pace, please, pace. I think the other thing is please try and be more risk adventurous. I can't say any more than that. You can't play on the global scene without pushing the boundary. In my world, we push the boundary a lot. We do things that we've never done. When we launched Snap in this market, it was because there was no brand that we thought was targeted at women. But this was an alcoholic drink, and we thought, what would we lose? I invested in glass and all that. The brand is flying. Push the boundary. Just push the boundary. Measure yourself against the best, okay? And reject the idea of good enough, okay? For me, the common denominator among successful companies is that, and successful people, is that in their world, only in their dictionary, only one word exists. That's excellence. I always teach people at Guinness to know the difference between good and great. Okay? And it's back to my point about Tam, the tallest amongst midgets. And lastly, please learn as a banking industry, especially you, the commercial banks and all that, to remove barriers and complexities. Most times, when you have to change things and it's not in the favor of the person you are talking to, you blame it on so many people. It's my experience. You might think differently. Okay? It's the central bank. It's the economy. It's the A, it's the B. Okay? That's fine, but try to learn to remove barriers and complexities. My word to you is that many times, many of us think we are stuck in traffic. I want to challenge you. You might be the traffic. Thank you very much.
Brilliant. Thank you very much, Shani, for that very insightful presentation. I'm sure that we all enjoyed that presentation. Now, let me give a short preface from my understanding of what he said. He looked at it from a manufacturer's perspective. That was where he started from. And from there, he also talked about the regulatory issues in the brewing industries as it affects competition between Nigerian breweries, Guinness, and the sub-miller. But of course, he also talked about the fact that he was going to attend a meeting he will be attending a meeting on Thursday, and that if he was asked a question about the position of the Nigerian economy, he would say, well, that it is stable, but it is fragile. Why does he think it is stable but fragile? He says the Nigerian financial system, not just about the banking industry that he says contributes about 80% consider about 80% of the business or transactions in the industry, but he also sees that he sees a situation where monies that are lent out by banks are short-term for long-term projects, and that there needs to be a paradigm. Well, if you ask bankers will give you the reason why this is so. Know that, but that's going to be maybe discussion for another time. Perhaps maybe one of the members of the panel would like to talk about it. But he also said for Nigerian financial services institutions to be seen to be globally competitive, that we must have consistent economic or national policies. That we need to begin to have situations where policies don't change right in the middle of the game. Of course, he gave an example of the Super Eagles, where they were earning $10,000 as bonus, and because they had won the African Nations Cup, they were going for maybe a less important program. Of course, their budget got cut or their bonus got cut to 5,000. That is a change in policy that demoralizes operators in a system. Okay. He also said that Nigerian financial institutions need to be globally competitive. How did he also explain that? He said, for instance, for him as a manufacturing company, he would like to see a situation where there is a bridge in the gap between the NIBOR and the LIBOR, where you have LIBOR at less than 1%, about 0.5%, and you are seeing your Nigerian NIBOR at about 13%, makes even his own manufacturing company less competitive in a global environment. So those are some of the issues and challenges that he saw. And he also concluded, from my perspective, that he said, look, to be globally competitive, that our financial services sector must have good people, their performance must be good, and that they must have good reputation, and these three must go together. I think he deserves a round of applause for this. Now, unfortunately, I couldn't stop Sheni because his presentation was excellent, but, you know, if I dare stop him, I'm sure I'm not going to get his business from tomorrow. So talking from a selfish standpoint, I didn't want to do that. But, you know, on my right, I have a prof. And you know profs too, if you don't... and next to the prof, you have a PhD, a doctor. Well, on my left, I have a capital market man. I can control this one. Incidentally, Prof was my boss when we were lecturing. He was the head of department in finance at the University of Port Harcourt. So I still have to respect him. But somehow, Prof, I hope you don't understand if we have to say that we try and limit some time to you. So we would like Prof to just give us a few minutes talk about his own perspective on the issues here. Thank you, Prof.
Thank you. Thank you, Mr. Chairman. I believe that we have three major stakeholders here. We're talking about the regulators, we're talking about the operators, and of course the customers. Now, let me start with the operators, with the supervisors. We know why banks are supervised, or the financial markets are supervised. Protect depositors, consumers, investors, and above all, the system, whether it is banking system or financial system. That protection is very important. So when we look at the challenges facing operators, I can talk about it from the standpoint that at least I was a supervisor and a deposit insurer until